a 20 billion reais haul. That's over $4 billion US. How did one of Brazil's most iconic companies, Americanas, suddenly find itself in the middle of the country's biggest ever accounting fraud? This isn't just a business story, it's a tale of ambition, deception, and a catastrophic collapse that sent shockwaves through the entire global financial market. For nearly a century, Americanas was a titan of Brazilian retail. It started in 1929, inspired by American five-and-dime stores, and grew into a massive empire, with thousands of locations, dominating e-commerce and physical retail, backed by some of Brazil's wealthiest billionaires. Including the founders of 3G Capital, the company seemed untouchable, a symbol of national pride and business success. But behind this shiny facade, a dark secret was brewing. The trouble started with a practice called supplier financing. Here's how it worked. Americanas would buy goods from its suppliers, but instead of paying them directly, it would have a bank pay the supplier. Americanas would then owe the money to the bank, not the supplier. On the books, this was recorded as a debt to suppliers, which is an operational liability. But in reality, it was financial debtor bank loan. For years, the company allegedly misclassified billions in these bank loans, making its balance sheet look far healthier than it actually was. The company's debt was artificially low, and its profits appeared much higher. The key mistake, or rather the key deception, was this deliberate misrepresentation. Hiding its true level of bank debt, Americanas could borrow more money at better rates, continue its aggressive expansion, and keep investors happy. It was a house of cards built on accounting tricks. The company was essentially using short-term bank loans to finance its day-to-day operations, all while telling the world these were just regular payments owed to suppliers. This created a ticking time bomb, as the mountain of hidden debt grew larger and larger each year. The bomb finally exploded in January 2023. The newly appointed CEO, Sergio Rial, who had been in the job for just 9 days, uncovered the accounting inconsistencies. He immediately resigned and went public with the shocking discovery of a 20 billion reais black hole. The market reaction was instantaneous and brutal. Americanas' stock plummeted over 75% in a single day, wiping out billions in market value. The company was forced to file for bankruptcy protection just a week later, admitting to debts of over 43 billion reais, or about $8.6 billion US, owed to thousands of creditors, from small businesses to major international banks. The fallout was massive. It wasn't just a Brazilian problem. Major global banks like Deutsche Bank, Goldman Sachs, and JPMorgan Chase were among the creditors, facing significant potential losses. The scandal triggered a crisis of confidence in Brazil's corporate governance and auditing practices. If a giant like Americanas, audited by top firms, could hide something this big for so long, who else could be doing it? The event sent a chill through international investors, making them wary of putting their money into the region. Lawsuits piled up, investigations were launched, and the careers of top executives were left in ruins. So, what can we learn from this colossal failure? First, transparency is everything. Hiding debt and manipulating financial statements will always catch up to you, and the consequences are devastating. Second, it's a harsh reminder of the importance of strong corporate governance and independent audits. Checks and balances aren't just bureaucracy. They are essential guardrails to prevent disaster for investors. It highlights the need to look beyond the headline numbers and truly understand a company's financial health. The Americanas saga will be studied for years as a classic case of corporate fraud, a cautionary tale of how quickly a retail giant can fall from grace. Thanks for watching, and don't forget to subscribe for more deep dives into the stories shaping our world.